What is up, ladies and gentlemen? It's your boy Kane Ruiz back with another Gucci Mane video, guys. Guys, top 3 stocks that will 2x by 2026, baby boys. We're going to get you guys that money. Now, first and foremost, I just want to say, guys, I'm not a financial advisor. This is just my opinion about 3 stocks that will double, in my opinion, guys, by 2026. I am not a financial advisor. This is not financial advice. View this as your own discretion. All right. So out of the top 3 stocks that I'm going to talk about today, 2 I own. So I just want you guys to know I do put my money where my mouth is, and 1 I am trading options on currently right now. So let's hop into the first stock that I think will double by 2026. All right, and so the first stock that will double by 2026, in my opinion, is SoFi Technologies. I think SoFi will double at this current share price. I would say about $8. So by 2026, I think SoFi will be a $16 stock or surpass a $16 stock. In my personal opinion, I think it'll be surpassed. Granted, with all these stocks, guys, I'm about to go over today, that's if the economy stays trucking along and doing what it does. Obviously, if a recession or a market crash happens, I don't think these stocks will double at the price points that we're going to go over today. So just keep that in mind, guys. I don't think any stocks will primarily double if we have a recession. So with that being said, guys, take that into consideration. So I think SoFi will be surpass $16 by 2026. So let's just go over the past week, guys. Obviously, there was a big dip in SoFi Technology stock with the news coming about convertible notes, right? So the convertible note thing, people started dumping shares and stuff because, well, when there's some slight of fear that these analysts or these news coverage like Seeking Alpha and Motley Fool come out with, guys, and they fear monger people. Obviously, when that news came out with convertible notes, there was a sell-off. But that's good for long-term buyers, guys. So I think under $8.50 is a good time to buy SoFi. I think anything under $10 is a good time to buy SoFi, but I don't know if you'll reach that double by 2026. I don't know if SoFi will be a $20 stock by 2026. I'm just thinking it will surpass 16 at least. I do have 200 shares right now. My average cost is $8.50, guys. Right now, I am down on the position, but I am doing a whole bunch of SoFi options right now, guys, which we will get into options, guys, later on. I got a whole bunch of videos that I'm cooking up for you guys. So let's just go over my options real fast on SoFi. So I do have 2 calls at $12. Guys, I am selling calls on there just for the premium. And guys, if we get close to that, I'll roll my position and keep on rolling my position. We got one $8.50 put that is due by March 28th, and we got 5 $8 puts that are due March 28th. And then I am also doing a poor man's cover call, guys, which we'll all cover in videos that will come out later this month or early April. I'm doing a poor man's cover call on it right now. So guys, that's what I'm saying. I am very bullish on SoFi. So with that being said, let's go down and let's take a look at it. There's 19 analyst ratings, 21% buy, 58% hold, 21% sell. Let's see what Morningstar Ratings has a 4-star on it. They think the fair value of SoFi is at $14. And I just want to look at the earnings real fast. So guys, with the earnings, you see the stock that has expected, you see the dot right there, and then actual EPS. So if you look, Q1 of 2023, Q3 and Q4 of 2023, they all beat. It was all a beat. In Q2, I think they beat a little bit on Q2 of 2023, but it was close to expected, guys. So we'll just say it's expected. So you're saying SoFi beat earnings consistently, or at least me. Now, I want to go over the financials with you guys, and we'll go over just a quick overview on it on Qualtrim, guys, to show you my thoughts, and we'll finish my thoughts there on Qualtrim to go over my view of SoFi Technologies. Here's its balance sheet. It has a market cap of $7.53 billion. Cash on hand is $4.16 billion. Debt is $5.14 billion, right? Now, I want to talk about the convertible notes before we even hop into the rest of the balance sheet. So, guys, with the convertible notes, they have convertible notes coming out here to raise capital, guys. And a lot of people think they're doing that to pay off debt and to do this and that. They did do it to save on interest for the notes that are coming up in 2026. But, guys, they're taking that money, guys, because Anthony Noto, I don't know if a lot of people know this, he is incentivized to grow this company at a certain share price, right? So if let's just say hypothetically, I don't know what the certain share prices are, guys. I'll have to look into that for you guys. If you guys want to know, leave it in the comments. But let's say, if you grow these shares by this date, Anthony Noto, let's say January 25th of 2025, if the stock price is at $16 or above, you get X amount of shares, right? So he gets X amount of shares. And so he keeps on having these price points of, if you grow the stock price at this price, you'll get X amount of more shares. So guys, he is incentivized to grow the company as much as he can so that he can get that bonus. And if you guys work a regular job, rather be recycling bonus or attendance bonus, this and that, you guys want to sit there and get that because it's money. It's money for stuff that you're already going to do. So that's why he took out the convertible notes, not only to save that money on the notes that are about to be due here soon for his debt, but also to take that money, guys, and to grow the company faster. What they need is more money. Another thing is, too, guys, they own SoFi Stadium. Guys, they are the bank of the NBA, and they got, I think, Jason Tatum as the face runner of that. Guys, I mean, they're hitting up sports, guys, which is probably one of the best marketing schemes out there, guys. I mean, to sit here, you got people that constantly watch sports. They're involved in the marketing of sports, guys, and they're a bank. You know what I mean? That's pretty good. So let's look at the revenue. So the past year, they grew revenue up 41.29%. The past 2 years, 50%. I mean, guys, what bank out here is doing that? I'll tell you this, not JP Morgan, not Morgan Stanley, not Goldman Sachs, but I'll tell you one stock that is, and that's SoFi Technologies, SoFi LoFi, my boys. We'll go up into EBITDA. So they got 44.67 million for EBITDA. The free cash flow, guys, 178.88 million. Net income is 47.91 million. And their last EPS, according to December 31st of 2023, was 5 cents, guys. So, guys, they recently just became profitable, guys. Now, there's always worry, like, oh, it's going to be like an Uber stock where they reach profitability and then they lose money and they reach profitability again. No, guys. According to Anthony Noto, he said we reach profitability and we will remain profitable for the foreseen future. So he don't think that the stock will dip down. He think we'll keep on reaching profitability. We'll see what happens. But just a reminder, guys, he is incentivized to do that. So more than likely, the company is going to remain profitable. It does have 1.03 billion shares outstanding. And as we go down, guys, you can see company insider trading. I'm not really going to go over that with you guys, but I am going to go over the analyst estimates. So for the current year of 2024, there's 12 analysts on this stock, and they think the average estimate is 2.55 billion, guys. I think that SoFi will blow that out of the water. High estimate is 2.8 billion. I still think they'll probably blow that out of the water as well, guys. And the reason why is because, guys, I mean, they've been blowing, as I told you earlier, they've been blowing expectations on EPS time and time and time again. I mean, what SoFi does is they sandbag EPS numbers and they come out here and beat and beat and beat. So I think they'll beat that for the whole entire year. By how much, I really don't know. But that is SoFi Technology, guys. I think it's a great stock. I'm very bullish on. I'm still currently building my position up. I want to get anywhere around 300 to 500 shares of SoFi Technologies that I don't do options on, guys. So that's why I'm saying I'm currently building up my portfolio for SoFi. And that's that, guys. So we'll hop over to the next company. Guys, and the next company is one that I already built out my position on, one that we're already up a lot of money on, and I'm just going to hold out and wait to see what happens to it. And that bad boy is Palantir Technologies, guys. Palantir Technology. I mean, Palantir. I mean, guys, I hold this stock for a long time. Guys, I've been in this stock for a long time. I mean, I'm not one of the newbies that just hopped in Palantir, guys. The first time I bought Palantir, guys, was all the way in February 24th of 2021 at 8:58 a.m. Guys, and I held Palantir. Even when it was at its 52-week low at $7.19, even when it hit $6, guys, I held Palantir, guys. And I was down a lot of money, but I said, I know Palantir will rise back up, and look what it did. It rose back up, guys, and I am up 66% on Palantir Technologies. Now, by 2026, I think Palantir does have the potential of being a $50 stock. And I'll go over my bull case thesis with you guys in a little bit of why. Now, it is 53% of my portfolio diversity. I do have 450 shares, and my average cost is at $15.53. Kane, are you looking to add more shares to Palantir? Guys, I am not looking to add more shares to Palantir, but I am looking to trade options on Palantir, guys. So if you ever see my share count of 450 go up or down, go up, I just know I'm trading options on that, guys. 450 shares, guys. I am comfortable keeping that. I don't know if I'll add more Palantir shares, to be honest with you, especially around this price range. I think if Palantir goes below my average cost, I will start adding shares for the long term. Guys, that's that. We'll go down. So we got 20 analyst ratings, 25% buy, 40% hold, and 35% sell. Morningstar is a 2-star, a 2-star, and it says its fair value is $16, guys. And just kind of like as SoFi was expected, look at the expected EPS and the actual EPS. Palantir has been beating expectations, guys. They have been beating expectations. So I do think by 2026, I think SoFi will be a $50 stock. Hopefully around that time, guys, we're going to dive into the financials, and then we're going to go over a little bit more of a bull case when we get to the financials, guys, and the balance sheet, and talk to you about why I think Palantir will be a 2xer. So, guys, here's Palantir Technologies. We have a market cap of $57.83 billion. Cash on hand is $3.67 billion. No debt at all. Let's look at the revenue. So it's not crazy growth that SoFi was, but the past year the revenue has grown 19.61%, so close to 20%. But over the years since 2019 of March, you have seen Palantir grow its revenue steadily, which is pretty good. Last quarter for free cash flow was $296.31 million. So they have been getting some good free cash flow, and their free cash flow has been rising. The last year was 301% for free cash flow, guys, which is really good. Net income, guys. So the past year, net income has went up 202%. Last quarter was 93 million. And then the EPS, guys, last year has went up 296%. The last known EPS was 4 cents at 12/31/2023. It does have zero debt, guys, but it does have 175.22 million in capital lease. Shares outstanding, guys, there's 2.36 billion shares outstanding. Obviously, the CEO is a legendary Alex Karp. And this is company insider trading, guys, if you guys want to take a brief overview of what the insiders are doing. And then we'll go down to current analysts. So for the current year, there is 11 analysts covering Palantir. The average estimate for EPS is 24 cents, guys, and the high estimate is 33 cents. In my opinion, I think in my opinion, I think Palantir will be somewhere in the middle of that. I think probably around 26, 27 cents, guys, for Palantir. But who knows? They can probably blow it out of the water. Revenue-wise, they think anywhere 2.63 billion is the average. I think they'll probably get around 2.75 billion, in my opinion. So what is Palantir? So, guys, Palantir, a lot of people don't know what Palantir does, and to put it in basic terms, Palantir makes what was deemed as useless data and convert it into dollars, to give you a basic scenario. So, guys, all the data that's gathered out there, all the information, they take that information, they put it into their algorithms, rather it be Foundry, Gotham, Apollo, AIP, and it spewts out information on the sense of, this is what this does, that's what that does. You're missing this thing over here. Oh, it can forecast certain things that happen in the future. You know what I'm saying, guys? So, it's a sticky business model. They have, government uses it. It's also for commercial use, guys. It's also part of the AI boom, guys. It is a AI tech company, guys. And guys, AIP is what is growing the commercial side. And the good thing that they're doing with AIP is they have AIP boot camps. And I think that's a very smart thing to do, to come out here and show people, hey, this is what AIP can do. Guys, this is also rumored, but it is true, that this was the company that found Osama bin Laden. So if they found Osama bin Laden, of course they're going to find that $50 price by 2026. I'm just kidding, guys. But Palantir, guys, as you see Nvidia popping off, guys, that's the hardware side. You know what I'm saying? When they're coming out with their new chips, Jensen's doing a very good job over there. But as you see that's the hardware side. Guys, Palantir is the software side. Palantir is the software side of AI. And yes, hardware is important, right? But so much more is the software, guys. So much more is the software for AI. Guys, and if you guys are watching this video, I know you guys probably already know a lot about SoFi, guys. I'm sure you guys know a lot about Palantir already, guys. But guys, those are my two cases for those two stocks, guys, and we'll get into the next stock. Guys, so the next stock is PayPal. Now, guys, I was in PayPal, guys, and I sold all my shares because, guys, I just had all that capital tied up into PayPal, and I just didn't want to wait forever for PayPal to eventually spike back up to my average cost. Guys, my average cost was around $116 for PayPal, right? And it's at $59 a day, right? So it's like, Kane, well, why'd you put it on your stock that's going to 2x by 2026? Guys, out of all three of these stocks, PayPal is probably one of the ones that I'm worried about the most. And the reason why is because a big turnaround it has to do. A major turnaround, guys. It not only does it have to turn around the whole entire company, but it has to make the company attractive to customers that were already turned off by it under the last CEO and under the last management team. But guys, I want to give you a very good bull case and a little bit to see if PayPal might be for you guys. Kane, are you going to buy back into PayPal? Guys, what I'm going to do with PayPal is strictly trade options, guys. So I might hold maybe 100 shares of PayPal. And what you might see is if I do, I'll probably just keep on selling cover calls and ride that cover call all the way back up to where the price is, guys. But I'm not going to be with SoFi and Palantir a long-term holder of PayPal, guys. It's basically just a stock that I'm going to trade. So I am not, I did put my money where my mouth is with the last two stocks, but with this one, guys, it's strictly just a trading option for me, guys. Get in there, and if I am in there, and ride the price back up if it ever does, which I think it will, guys, cash out. So, guys, let's dive into PayPal. So, guys, I just want to give you guys a brief overview. The past year, it's been down 23%, but the past 5 years, guys, 39%. If we look, the price is $59 right now. I mean, if you go all the way back to March 8th of 2019, the price was higher on PayPal than it is today. I mean, that's stupid. It's dumb. I think, in PayPal's case, I do think that PayPal was very oversold, but no one wants to get into a company that's been labeled as a dying company. I don't think PayPal is a dying company. I just think PayPal just needs to turn the boat around. So we got 50 analysts on it, 46% buy, 50% hold, and 4% sell. Morningstar rating is a 5-star. It does have a narrow economic moat. Fair value is $104. If you look at expected earnings versus actual EPS, guys, this one has been beating expected EPS, guys. So that's good. So we're going to dive over and get into the numbers, guys, and I'm going to give you guys my little bull case about PayPal. So, guys, here we are at PayPal. The market cap is $63.68 billion. Cash on hand is $14.06 billion. Debt is $9.26 billion. We're going to hop into the revenue. So what's going on is one of the major turnoffs for PayPal right now. Let's look at the revenue, guys. Past year, it only grew 8.71%. For a growth company, that's not much of a growth company. You know what I'm saying? For a growth stock, it's not much of growth. You know, it's in single digits. It's trading as bad as a bank is. You know what I mean? So that's one of the turnoffs from PayPal. But if we scroll down, look at the free cash flow, guys. $2.47 billion last quarter that it came out with. Net income is $1.4 billion, and EPS 1.29. Shares outstanding, guys, 1.08 billion. All right, and Alex Chriss is the new CEO, and this is what they're doing. Company insider trading gives you guys an example of if they're buying, selling. You guys can look at that at your own discretion. We'll get into the EPS. So current year, 2024, there's currently 28 analysts that are covering the stock. The average estimate EPS is $5.56. High estimate is $5.99. We'll take a look at the revenue, guys. Revenue side, $32.27 billion, and then on the high estimate is $33.45 billion. EPS wise, I think they'll come in at the average at $5.56. And the reason why I'm saying that, guys, is because, as guys, with PayPal, it's a massive ship. It is like a Carnival Cruise massive ship, and it's going to take a while for it to turn the ship around, guys. So I think this year, 2024, will be a big pivotal year for PayPal. Obviously, they obviously got a new CEO and a couple new people on the executive team. Alex Chriss is from Intuit, one of the most beloved stocks on Wall Street. So, as I was saying before, it is a big ship that does need to turn around. And this turnaround is going to take primarily this whole entire year. And I think within this turnaround year, this is a very pivotal year for PayPal, right? But it does have a couple things going for it. And I'll tell you guys a couple things that does have going for it, right? One is Alex Chriss. Alex Chriss, he came from Intuit. He specializes in technology in the sense of making the company more technologically advanced in the sense of small businesses. So I know PayPal is a big business, but PayPal has a lot of little things with Cash App. And so I just want to give it, look, this is the thing, guys. Look at the share price, $59. And look how much they're bringing in. Look at the free cash flow, 2.47 billion. Look at the net income, 1.4 billion, guys. So it can buy its way back to growth. It can buy its way back to growth, right? So with the money they're getting right now from their revenue, and then after paying everything and doing what they have to do, guys, they can dedicate about all the money they have left over into buying back that business, which they are doing. I think they said they're doing a 5 billion share buyback plan, so they can buy their way back to growth, right? So one thing is stock price is low, right? Second thing is they can buy their way back to growth, right? And so with the stock price being low and then buying their way back to growth, they can buy more shares than what they did back in the day when the stock price was high and they were buying back shares, right? So they can buy the growth back, right? The third thing is it's a good company to have during a COVID event, right, guys? It's a good company to own during a COVID event. Obviously, we've seen when COVID came around or a disease came around that PayPal shot up. So during them type of times, PayPal is a good company to own, kind of like how Zoom was, right? But this is a thing I'm going to caution you on PayPal. If they can't get their revenue to go back to double digits, and if they can't grow the number of consistent users that they have, this company is just going to keep on going down. And those are the two things that are important. They need to get their revenue back to double digits, and they need the revenue growth, guys. The revenue growth. They need to get back to double digits, and they need to get their customer basis back to growth. Not losing customers, guys, to grow customers. That's for today's video, guys. Like, comment, subscribe. Guys, have a great day. Peace.